Good morning, everyone. Thank you for attending what is the third part of this presentation, Non-QM in Action, hosted by Angel Oak Financial, or excuse me, Mortgage Services. The first two have been great presentations. I know you'll learn a lot from it, so we thank them for joining us again. I'll do some quick introductions. Before I do that, let me do a real quick plug for the FAMP and specifically the Broward Gold Coast chapter. We do have a couple of events coming up that I wanted to bring up. Tomorrow night, we have a networking event at Brimstone in Pembroke Pines. So head to our site, fampgoldcoast.org, to get more information on that. We also have another webinar coming up on March 3rd. You'll see emails go out on that on appraisal updates from Equity Solutions. And then our Brokers Are Forever James Bond themed trade show is coming up on March 9th. Come see Angel Oak. I think you're in booth number 44, 45. You guys have a VIP booth. So definitely come out and see the gang in person on March 9th. Again, that's all that 3 events happening in the next 2 weeks. So we got a lot happening. So please get involved, head to the website, get more information, and we look forward to seeing you all. Briefly, I don't want to take up a lot of their time. We've got a great topic today, going through some more non-QM specifics, but briefly, I wanted to introduce the team here. We've got John leading the group here, and Scott and Alina. I do have bios for all of them, but needless to say, these are experts in the field. I know Scott and Alina well. I lose deals to them every day, so I know they're fantastic, very knowledgeable, and a great sales team. And John has led several trainings for the chapter and the state as a whole, as well as doing a breakout at last year's trade show and again at this year's trade show. So they're great supporters of the mortgage professionals of Florida and beyond. And they do a great job training us on these products. So with that, John, I'll just turn it over to you.
Yeah, thanks, Mike. And again, Mike, thanks for your support also of Angel Oak, not only at the Broward County chapter, but obviously at the state level too. So we really do appreciate it. My name is John Giminod, Regional VP of Sales here at Angel Oak Mortgage Solutions, and I have the honor of working with both Alina and Scott. I'm going to turn to Alina first. I've been here almost 8 years. I'm going to introduce Alina Doge. Alina, just give us a little bit of information about yourself.
Hi, guys. I've been with Angel Oak for about almost 4 years now. I actually relocated specifically for this position. I look forward to doing the presentation for all of you, and hopefully we'll schedule some one-on-ones as a follow-up.
Great. And then Scott Grabel, both Alina, just so you guys know, both Alina and Scott, I won't say easily because everything they do is definitely well earned, but easily qualified for our sales incentive trip this year. So Scott, why don't you introduce yourself?
Yep, how you doing, everybody? I'm Scott Grubel. Been with Angel Oak since 2016, serving the Broward County area.
Yeah. So today, if you were not part of the previous 2 meetings, the first one we covered bank statements in depth. The second one last week was investor cash flow. Did a really, really good in-depth dive into that. And today we're going to talk about just full doc, but it's not just full doc of agency fallout. We're really going to talk to you today about some other things to think about as you're even marketing yourself and trying to grow your business. We've seen, that refi business drop off. So hopefully today you will learn from Scott and Alina, like I've said, 2 of the best in the business, on how to not only capture that lost business, but even grow your business. So without further ado, we are going to launch a poll here, and it's really just who has, let me get this poll, and I will say, have you closed a non-QM loan in the last 12 months? And I will say, and I think it's a tribute. It's not. I think it's a tribute. I know it's a tribute to the Angel Oak brand, and more importantly, Alina and Scott's hard work, specifically in your area, on getting the Angel Oak name out there. And it doesn't surprise me, even though it's still a huge opportunity. 67% of you have not closed a non-QM loan in the last 12 months. So guys, this is great. This is a huge opportunity, and all of you who are getting on this call are embracing, obviously you want to learn about it, so you're going to embrace non-QM. So Scott, let's talk about our Platinum program, which is just one of our full doc programs.
Absolutely, John. I really think the timing couldn't be better to go over these full doc programs on the non-QM side with our audience here, because I mean, typically most loan officers, brokers, when they think of full doc, they're thinking conventional Fannie Freddie, right? And a lot of people tend to forget that we have these non-QM full doc programs. The beauty about them is they're very versatile. They can help accommodate a lot of loans. They can help a loan officer place a lot of loans. So knowing the ins and outs of them, I think, is going to add a lot of value to your business. And I want you to think of these, when you think of a non-QM full doc, keep in mind that a non-QM does not have the same loan amount caps that you're going to see on the conventional side. Our full doc programs go up to $2-3 million, so you can include jumbos right in there. And with the agencies right now and a lot of the changes they're making, there's loan level pricing adjustments that are currently being put into effect for LTVs on the higher end of the scale. So when you look at the pricing on how that's going to affect pricing conventionally for 80, 85, 90, 95% LTV loans, I think you're going to see these non-QM full doc loans are going to price very competitively. And one of the benefits of them is over 80% loan to value. There's no PMI on any of our loans. So just, little overview there, but let's dive into the specifics here of the Platinum program. So on the left-hand side of the screen, you guys will see here some basics. Minimum credit score for the Platinum program is a 660, and this program goes up to 95% LTV with no MI. So I should kind of start by saying we actually offer two different full doc programs. Our Platinum program, which I guess you should consider just missed agency full doc. And then we have our Portfolio Select program, which we'll go over a little bit later, which is going to be, I like to say your Alt A full doc. It's maybe one step below just missed agency. So again, on Platinum, 660 credit score, 95% LTV. And as you can see on the right-hand side, this program goes up to a $3 million loan amount. It does have a minimum loan amount of $250. However, if you have some lower loan amounts, we can squeeze them into our Portfolio Select. We'll go over that later. This program, as I said, just missed agency, so it's going to have some more leniency, like 4-year seasoning on foreclosure, short sale, bankruptcy, and deed in lose. We can do obviously primary residence, second home, investment properties on this program. Purchase, cash out, rate and term, all apply. Again, full doc only. We do offer the 40-year interest only option. So that's a key there for you guys. Obviously, interest only is not offered on any conventional or agency jumbo programs. That is an option on our full doc program. You have a buyer looking for that feature, here's the program for it. 1-year tax return. So let's talk about 1-year tax return. One of the benefits, and again, it's full doc with a non-QM twist here, is that on the 1-year tax return conventionally, as we all know, the borrower has to be self-employed for 5 years. With our Platinum program, the borrower only has to be self-employed for 2 years, and then you can take them the 1-year route. So that's another, star key that you need to know there that can add value. Non-warrantable condos are allowed. So we talked a little bit on our previous webinars about what's going on in the condo market with all of the new requirements that Fannie Freddie put in place. We on the non-QM side are seeing a huge uptick in condos coming our way because we do not have all of those requirements. On condos, we basically have our standard non-QM condo questionnaire that needs to be completed, and that's it. We don't ask for the budget, we don't ask for financials, we don't ask for any of the other documentation you're seeing today on the agency side. And we're a lot more lenient specifically to certain things like non-warrantable. A lot of things can make a condo non-warrantable, but for example, we can go up to 100% investor concentration in a building. We have different ways of meeting the reserve requirements. Notably, not only do we count what is being collected on the current year's budget for reserves, but we can also take what may have been set aside from previous year's collections, and most companies have an account, and combine that with what's being currently collected in the current year's budget to meet the reserve requirement. So
Hey Scott, I'm going to interrupt you there because I think that's critical. Over the last two the last two webinars we've done in this series, I've had more questions come up. So and again, this is being recorded. So for everyone on this, yes, this is being recorded. We will get this out to you before end of day tomorrow. And as a bonus, if you were not able to attend the first and the second one for bank statements and investor cash flow, we're going to send those to you by end of day tomorrow also. But Scott, and again, I apologize, but this is what makes you an incredible AE, Scott, knowing all this stuff. Just repeat that what you said regarding reserves, please.
Regarding the reserves, okay. Yeah, so on a standard agency conventional loan, it's really cut and dry. If you're doing a full review or a limited review, the bottom line is you can only use whatever reserves are being collected on the current year's budget to meet the reserve requirement. With Angel Oak on our non-QM programs, all of our non-QM programs, not just full doc, all of them, what we do is we take the reserves that are currently being collected in this year's budget and we add them to any reserves the association already has set aside in a separate bank account. So what we see is that most condo projects, if they're only collecting, say, 3%, 4%, 5% this year, that's because they already have a funded account from previous year's collections. So they have no need to hit the unit holders with this huge reserve collection in the current year's budget. We can add both of those numbers together to meet your reserve requirement for the program or for the LTV that you're doing. So totally different than agency. We save a lot of loans, not just on the jumbo full doc program, but on all of our programs.
Thank you, Scott. That's huge. And I had more feedback, not only from some of my AEs who aren't in condo-centric areas of this country, just really were blown away when you brought that up. So, those are just additional tips and tricks. This, guys, anyone on this call, we have a question box for you to ask any questions to be answered by both Alina and Scott. Sorry, Scott, I'll let you finish here as far as highlights.
No problem at all. I mean, that wraps up the highlights, but again, to summarize, the main points here is, guys, this is a full doc jumbo program that is going to be extremely aggressively priced. I am personally pre-qualifying loans right now where loan officers are telling me our pricing on this program is coming in better than prime jumbo pricing. We all know prime jumbo pricing is a little crazy right now. So what do? They have to increase their rates to cover their margins because they don't know where the market's going to be. They get very trigger shy. So again, price us out on our pricing engine. You're going to see full doc, jumbo, up to $3 million loan amount on this program. You'll see excellent pricing. And then obviously some of the other features we discussed. You have more leniency. If your borrower falls out of conventional because of a BK or a foreclosure, we're a little bit more lenient here with our seasoning. If your borrower needs an interest-only option, we have that available. If your borrower wants to go maybe no PMI and pricing is compatible because of the new loan level pricing adjustments, you have that option here. And then of course, the non-marketable condos we discussed.
Yeah. Hey, Alina, before I let you take us into the score and LTV breakdowns, one of the things Scott just touched on that I really wanted to talk about, I was just on a call prior to this with our secondary, and and Scott mentioned this in the beginning about loan level pricing adjustments are coming soon. They're for April 1st, but I'm sure everyone's going to start making those probably from today on. And based on buckets, 75% and greater for second homes, even up to 85%, you'll really come to Angel Oak because we are going to be priced competitively, if not better, than a lot of those agency deals. So Alina, give us a little bit of a breakdown on what's the lower loan amount for the 95, what's for 90, and then for 85.
You mean the score? So the
Yes,
score for the program is going to be 660, and it will max it out at 85% LTV. You need 700 for 90, but with only 720 credit score, you can go all the way up to 95% LTV.
Yeah. And Scott, you mentioned a lot of these borrowers, we talked about it on investor cash flow and bank statements about self-employed and investors being, financially savvy. Go into a little bit detail of our interest only and how that works.
Yeah, great feature. So the way it works is it's a 40-year interest only loan well, I should say 40-year interest only is the name of the program, but the first 10 years are what's interest only. And then after those first 10 years, it's going to amortize to a standard 30-year fixed. You're locked in at the same rate from day one. So the rate that the borrower locks in and the rate that the interest only payments are going to be based on is the same exact rate he will continue with after year 10 when he amortizes into a standard 30-year fixed loan. Really good feature there. And then, to touch a little bit more, John, on what Alina just mentioned, because I really want people to kind of, understand the impact of it. With a 720 credit score on this program, you're talking you can go up to 95 LTV and 2 million loan amount on a condo. I mean, that's really hard to find out there.
Yeah, that's huge. And Alina, can they waive escrows on this program?
Yes, you can.
And then, Scotty, you talked on loan amounts. I really think one of the other things, and we touched on this, is being able to go second homes and investment properties up to that 85%, I believe is huge. Again, those borrowers want to cash flow and want to keep as much cash in their pocket. So, Scott, talk about I know you talked about, single family. Talk about, how many units will we go up to? I know you touched on condos. Touch on that a little bit.
So the investment properties, obviously single family, PUDs, condos, but we can do multi-unit properties here as well. We can go up to 4 units on the multi-properties, on investment properties. And as you mentioned, John, we do go up to 85 LTV on investment properties on this program for purchase, rate and term, and cash out.
Yeah. And Casey has a question here. Is 95%, and Casey, I think you've been on all 3 of the previous ones, so thank you for doing that. Alina, is the 95% LTV only for primary?
Correct. Second homes are maxed at 85. One thing I want to add to what Scotty just said in regards to 2 units, even on investment property, we are maxed at 70% LTV, but we do allow you guys to treat duplex as the owner of property, which can be maxed out at 95% LTV with the hit to the rate of a quarter of a point. That's it, which is huge.
Yeah, that is huge, Alina. Thank you. Scott, talk about, obviously in Florida, there's been great appreciation. Talk about our cash out a little bit, what will allow as far as cash out scores required. And then Alina, then I'm going to let you talk about delayed financing, which has been off the charts, right?
Yep. So on the cash out features, we can go up to an 85% LTV cash out, no PMI, of course, with a 700 credit score in this program. For primary and second home. And we can also go up to, on investment properties, 85% LTV cash out. So across the board, primary, second home, and investments, 85 LTV cash out with a 700 credit score. Max cash in hand is $1 million. However, we can go higher if depending on the credit score. But basically the guideline is $1 million cash in hand. So there's a lot of options there as well.
And Alina, especially you guys in that Broward County, you're seeing, multiple offers, cash buyers. Talk about delayed finance. And we talked about it on the previous 2 calls, but I think it's a huge tool in every loan officer's tool chest out there.
Sure. To add quickly to what Scotty just mentioned, cash in hand is $1 million, but you can go higher. We've made a huge point of that in the last previous calls. Please don't forget that 30% of the deals that we close at Angel Oak are outside of our guidelines, which means don't look at everything in black and white. Let us determine if there's enough compensating factors to go outside of the guidelines, because everything can be reworked, restructured to get you guys that deal done so you're not losing the piece of business or taking it elsewhere. Also, for the cash out, regular cash out, seasoning is now down to only 6 months from 12. But one thing that we've seen a lot of is these cash purchases just to meet, not to lose the contracts and so forth. So we do allow you guys to recoup that investment, or for your buyer to recoup that investment as long as you close in under 6 months. And it will be underwritten under purchase guidelines, not cash out guidelines. So there's different limitations from that. We've also added another feature where if the home was purchased with a hard money lender, you can still do a refi, recoup it. We'll call it delayed financing. The only difference is it has to close under 90 days versus 6 months.
Yeah. Great points, guys, and especially, on those cash deals, you LOs, originators are not participating in any of that on that delayed financing. You're participating in that. You've worked that hard, and you have so many sellers out there just pulling contracts because you just missed a date by maybe a day. Don't miss out on that, that hard work commission you've earned. So, Alina, let's get into underneath our Platinum program is another subset of a program, what we call asset qualifier.
Sure. So asset qualifier is truly for your high net worth borrower, which we like to call here in Florida snowbirds. Minimum credit score to get into the program is 700. We will go up to 75% LTV, minimum loan amount. And the guidelines are going to be very similar to Platinum because it falls under it. Minimum loan amount here is 250. We will go up to 3 million. We're now looking at employment or income, not pulling 4506s, so there's no DTI. We're looking strictly at the borrower's assets. And we made it easier for you guys. We'll look at assets for 6 months, but all you have to do is provide the most recent 30-day statement and then the one from 6 months ago to make sure the same funds are in that account. One thing I want to point is business funds cannot be used for that income determination, and neither are gift funds. And also a lot of people get confused. If you have somebody that's working, buying homes, flipping them, selling them, those are not considered assets that we'll be able to use. So the assets that have to be actually sitting there seasoned for minimum of 6 months. It does say primary residence only, but I have done a couple of second homes. I don't see any issues. I honestly wouldn't even run it past secondary, just automatically do it. In regards to the credit history, as I mentioned, 700 plus score, has to be a pretty clean borrower. Nothing on credit report for the last 5 years, no housing event whatsoever. We do give you an option to do purchase, cash out, and rate in term. You also have an option to do the delayed financing that we just went over. Interest only is available, and we do allow you to do non-warrantable condos here as well.
Yeah, great points, Alina. Again, this falls under that Platinum program, so there is a lot of similar highlights there. Scotty, talk about maybe some of these borrowers that you've closed. I know I've seen some AEs starting to this program really starting to ramp up. Maybe give us maybe like an example, maybe of something you've closed recently that maybe it might, tip an idea in someone's head on the call here.
On the asset qualifier program specifically, yeah. So I actually have one in process right now. We just pre-qualified it. I got all the final statements in yesterday, but so we have a couple of borrowers. They're out of Naples, I believe, retired. Not much in income coming in, obviously, because they're retired, but they have a lot of equity in their property. They wanted to pull out some cash out on the primary residence. The borrowers have in some Morgan Stanley investment accounts, they have north of $3 million in assets in stocks, bonds, mutual funds. Wasn't an IRA or a 401k, although we can accept those. It's just straight stocks and bonds. So based on the assets they have in those accounts, we're able to plug it into our worksheet where we can calculate based on their liabilities, their age, et cetera. There's two ways we can do it. We can do the asset qualifier, where as long as they have a certain amount of assets left over after we see 5 years worth of payments on the mortgage, they qualify automatically with no income verification. Or we can deplete it and do a depletion calculation. There's two ways we look at it. When a loan officer or broker sends it to us for pre-qualification, us meaning the account executives, we're always going to look at both options to see which one makes the most sense. They're priced exactly the same. So really, at the end of the day is if you have a retired borrower, have a borrower that maybe doesn't have employment or income, but is sitting on a lot of assets, there are options with these two programs to get them done.
Yeah, again, this is being recorded. A lot of great questions. Go ahead, Alina.
I forgot to mention earlier that you also can use trust for assets if it's revocable trust and your borrower is a trustee and a beneficiary as well. And one thing to keep in mind is if you have, let's say, husband and wife on the assets, then they both have to go on the loan.
And just some other things to think about of these types of borrowers. Scotty mentioned that they're retired. Think about someone, this is the great resignation going on, and maybe some people have left their job and they have a lot of, assets and they're not really ready to retire, but they want to move to another part of the country like Florida. Think of those borrowers. You know, if they're not say they don't, if they say they're not working, don't say no. You're going to call Scott or Alina. Also think about maybe someone who just got a large payout from maybe a medical or an accident or a divorce. So think of those things outside the box than your normal channels, and that's what's going to help you get through this year with that refi business potentially, you know, going down by 60%. All right, let's move on to you know, our next program, which is Portfolio Select, and we kind of call these our full doc programs. We call these our waterfall of products. So if you have a borrower that can't go platinum, you know, Scott and Alina are going to have a follow-up program to get you down the flow here. And the next one we have here is Portfolio Select.
Yep.
Scott?
So, yep, it's exactly right, John. It's waterfalling down the credit spectrum, like I mentioned earlier. Your just missed agency is going to fall into platinum. But then if it doesn't squeeze into platinum for a number of different reasons, which we'll go over, Portfolio Select is your option. And there's a number of different reasons why a loan may not qualify conventionally. I'm sure every LO on this call has had that situation where you submit the loan for a DU or an LP, everything looks great. The lender gets the loan, pulls a fraud guard, and next thing you know, you see something pop up like an old foreclosure that wasn't on credit, etc. It happens. We see it in live action every day. So you can waterfall them into these programs. So Portfolio Select, you're going to notice that there's a little bit more leniency to what we just went over in Platinum. So starting with your credit score is only 600 for Portfolio Select versus a 660 for Platinum. So if you have that borrower, you can't get qualified agency because the score is not meeting the requirements, you can go to 600 here. This program also goes up to 90% LTV with no PMI on anything over 80%. Loan amounts on this one will go up to 2.5 million versus the 3 million on Platinum. You have 2.5 million on Portfolio Select. And the minimum loan amount is only 125,000. So I referred to that earlier when we went over Platinum. The minimum there was 250. We can go down to 125 on this program if you happen to have a smaller loan amount. 1 year seasoning on foreclosure, short sale, or deed in lieu. That's huge, guys. Again, 1 year seasoning. If your borrower had a foreclosure, a short sale, a deed in lieu, sometimes they may have had late payments on a mortgage, 120, 150-day lates. You only have 1 year seasoning on this program for any of those situations. 2 year seasoning for BK, Chapter 13, Chapter 7. One thing I failed to mention earlier is that on Chapter 13 BKs, we can actually go off of the filing date for seasoning. Chapter 7, we always have to go off the discharge date. But on a Chapter 13, if it was discharged and paid according to schedule, we can go off of the filing date, which is almost always 3 years or more prior. But that's a big one, 2 year seasoning on BK.
So you just answered Michael's question there. That was one of the questions. So thank you, Scott.
Good, perfect. Purchase, cash out, rate and term, all apply. Primary, second home investment properties, all apply. DTI on this program goes up to 50% on the back end. Gifts are allowed, of course, on all of our programs, just not on investment properties, primaries and seconds. And then we do offer the 40-year interest-only option on this program as well. So you can go 40-year IO on Portfolio Select. Again, even if you had a borrower that had that situation where they had a BK 3 years ago or foreclosure just over a year ago, yes, they can still do a full doc loan on this program, interest only. Non-warrantable condos that we went over before, same thing applies on Portfolio Select, no restrictions there. And then obviously, yeah, loan amounts over 1.5 million would require second appraisals. That's pretty standard. So again, you're waterfalling down the spectrum, could be a couple of different, obviously the loan didn't qualify conventionally, or maybe it's a jumbo. And if it didn't hit all of the parameters for the Platinum program, Portfolio Select can get it done for you.
Yeah, in the past, we've called this that 2-for-1 loan. And it's really that borrower, especially today in the market, and it continues to go up, you know, don't tell them to wait till they have that seasoning from that bankruptcy or that foreclosure or wherever it is. You know, tell them to get in that house now. And then when they get that seasoning from that bankruptcy or foreclosure further and further in their rearview mirror, you can refinance them into an agency loan, and they'll have equity in the house. And, you know, I don't know, I can't tell the future, but who knows where rates are going to be by the time that seasoning comes due, right? So get them in. These rates are really, really competitive still. Maybe not in the agency world, but, you know, I think the highest price on a 90%, you're going to look in the sixes or maybe low sevens, and that's no MI. So, Alina, take us through that LTV score buckets just for giving everyone just a little highlight there of minimum scores for certain.
Sure. 600 will give you 70 LTV, 660 will be up to 85, and 700 for 90. And one thing I wanted to add, one of the major rules for Angel Oak has always been the primary residence, if you're renting, to provide 12 months of canceled checks. And now we give you an option for somebody that can document those payments, making true cash payments for the monthly rent. We do allow you to go VOR, private VOR, under this program up to 80% LTV.
Yeah, that's a recent enhancement. And that's another reason why stay in touch with your AE, Scott and Alina, because they are going to be, you know, the ones that have the most recent enhancements. You know, when they come out, we've had over 40 enhancements in the last year and a half. And as Alina mentioned, 30% of the deals we close don't meet our guidelines, and it's because of their expertise and their experience of knowing how to get deals done and get them through and closed at Angel Oak. Scotty, talk a little bit about reserves and then specifically what cash out can be used for.
Yep. So the reserve requirement on this program is 6 months, only on the subject property. So if you have a borrower that owns any other investment properties, et cetera, it's only 6 months on the subject property. If you're doing a cash out refinance, the cash out can be used to cover the reserves on all of our programs, not just on Portfolio Select, Platinum, Full Doc, or Asset Qualifier, but on all of our programs. So yeah, I mean, there's so much flexibility here, guys. I really think for an LO in this market, these Full Doc non-QM programs add a lot of value to you because, you know, the door is not closed if it's not fitting conventionally. There are other options, like John said, to get your buyers into properties so they can take advantage of that appreciation, lock in current pricing. And John held it on the head. Most of these loans, these borrowers are going to end up refinancing out of eventually into an agency loan, and they're going to come back to you because you got them into this home through these programs when nobody else could, or when people weren't aware of the program and turned them away. So there's always that 2-for-1 factor there. And the last thing I want to mention on, guys, is Platinum, Portfolio Select, Full Doc, non-QM loans, any of our programs, they are such a great conversation piece when you're presenting. When you go in speaking to your realtor referral base, anybody you're presenting to, you know, these are the type of programs, these are the type of highlights and features that really set the light bulbs off, and they get realtors thinking. And a lot of realtors still aren't aware that these programs are out there and available. So you're going to help them sell a few more properties as well.
Hey, Scott, I mean, it's not just realtors not aware of it. You know, the 67% of the people here today would really appreciate have not closed a non-QM loan in the last 12 months. So I think that's huge. And you go in there, Scott says, you know, light bulbs go off, but you are different. You're a differentiator from everyone else going in that office. Alina, let's talk a little bit about ITIN, which was just a recent rollout for us.
Sure. And I want to add quickly, and guys, these loans are not harder to do. And you have your local account executives that do a lot of pre-work for you, pre-underwrite these deals in order to release the pre-qual, so you're going to know ahead if it's a yes or no deal. Obviously, there's certain things that are going to be outside of your control and ours, and there's things that underwriters have access to that we do not. But outside of that, once you get that pre-approval from us, you know it's a good to go deal. There's not going to be any issues going forward.
Great point.
ITIN is one of the newest programs we recently rolled out under Portfolio Select. This is our only program for non-perm residents outside of the foreign national. It's a regular full doc. Minimum credit score here is 600. We will go up to 75% LTV on the purchase, and cash out is maxed at 70. We will still do jumbo up to $2.5 million, which is huge. Same seasoning applies as it would on Portfolio Select, 24 months for bankruptcy, or you could do 1 year for foreclosure, short sale, and deed in lieu. This is DTI is 40 over 50. So a couple of things. Escrow waiver is not allowed yet. Again, this is a new program. We're still testing the waters. as many enhancements as we've had so far in the last few months. This probably will be updated recently as well, but for now, no escrow waiver, interest only is not allowed, and it's only one unit for the purchase or refi. And you can do purchase, cash out, and rate and term as well.
Yeah, Scotty, anything else to add to ITIN here?
No, I think Alina covered the majority of it. There's very few options out there available for ITIN borrowers. So we wanted to introduce, again, another option, another solution to our clients, our customers, our loan officers and brokers to be able to capture more loans. I mean, that's at the end of the day what our products and programs are all about, is helping you guys close more loans and make more money, capture more business.
Yeah, so
and these are legit borrowers. Hold on, sorry. These are legit borrowers with pretty well-established credit history. And I would point out that we do look at the trade lines as well as we would on any other program. 3 of 12 months or 2 of 24 with activity in the last 12. And if you have rental history, 9 times out of 10, you can use 24 months canceled checks as a trade line.
Right. Scotty, just take us through a quick quote scenario. Well, let's use full doc and
Yep.
just.
All right, so our online pricing engine here to price out a full doc loan, pretty simple. You're going to plug in your loan amount here at in this section.
Oh, sorry.
There you go. Select your credit score from any of the drop downs. LTV, of course. Housing history normally would be 0 times 30. If there were any housing events, though, you'll notice there's drop downs available there to plug them in. There you go. You have your property type, single family, condo, PUD, et cetera, it'll all be there. Purchase, full doc, owner occupied, US citizen. So you guys will notice down at the bottom that you'll see pricing right away for all of the programs that the borrower qualifies for. In this case, you have both here, Portfolio Select and Platinum. The LTV you requested is 80%, so there's your first column. But it's letting you know that if you wanted to, you could go to 90% on Portfolio Select. You could go to 95%, 90 on Portfolio, 95 on Platinum. And then obviously your par rate, borrower rate pricing, borrower paid pricing, 5.375 there Portfolio, 4.5 on Platinum. And you have some notes towards the right on some of the most important guidelines, the seasoning for BK, seasoning for housing events, etc. So you get everything you need basically right here with some more basic guidelines down at the bottom as well. From here, if this looked like something looks good to you, you want to move forward and you want to send it over to an account executive for a pre-approval, you'll hit that blue select button. It'll take you to page 2, where if you have your 3.4 file buttoned up, you will be able, there we go. You'll be able to drag and drop your 3.4 file right in here and import it safely into our system. If for some reason it's not buttoned up yet, you can hit that next button. And in page 3, you'll input your basic information here at the top, select your account executive first, of course. And then at the bottom, you'll see that we have buckets where you can literally drag and drop any of the loan documents, your PDF 1003, your credit report, your 1008, along with any income documentation as well. Once you put that in here, drag and drop it in, and you hit that submit button, that will come directly to your account executive. We get a notification as soon as that pops into our inbox, and then we will go ahead and work on that pre-qual and get it back to you as quickly as possible. It is literally that quick, simple, and easy to submit a loan for a pre-approval to us. It's just clicking a bunch of these buttons. I mean, within 2 minutes, you can have a pre-qual submitted to your account executive for review.
And that would go directly to Scott, directly to Alina. And if it's a full doc deal within 24 hours, you will have a pre-qualification back to you. If it's a bank statement deal, we're doing that calculation for you. So it might take, 24 to 48 hours. So, yep. Hey, Alina, let's just show some, we're coming up to, 20 minutes before the hour. Let's just show a couple of the marketing features, marketing tools we have featured here. As Scott mentioned early on, different ways to not only market yourself, but to grow your business.
Sure. So all the tools that we as account executives use are available to all of our approved brokers. They're 100% customized, so Angelo is not going to be anywhere in the documentation. You have a couple of different options. You have flyers, social media postings, whiteboard videos, and a PowerPoint presentation. Once you log in, your information is already going to be populated when you click on the flyer that you want to customize. John, can you pull one up?
Yep, I'll pull up a full doc flyer here. Yep.
Thank you. If any information needs to be updated, your disclaimer, if you've changed your licensing and so forth, you're able to do so. You can put your business card, you can put your picture. One of the awesome tools here is if you wanted to partner up with your realtor referral source, you can add their information on the flyer as well. That's a huge selling point when you're talking to your referral partners. Hey, we're going to go ahead and market these products to the possible customers. I'm going to have my information as a loan officer. We're going to put you as a realtor and so forth. You have that option. You can kind of choose where you want that logo to go. And once you create one flyer and save it, all you have to do is go to a drop-down box in the middle of the screen and choose all the other flyers that you want created, and the same information will pre-populate. So all you have to do is just save it, and then it's ready to go. Along with these flyers that you create, we have the social media postings. I mean, this is dumb. If you guys are not using it, I don't know what to say, because all you have to do is just copy and paste it, put it on LinkedIn, Facebook, whatever tools you use, and it takes you 30 seconds to do it. And depending, again, who is this message going to? Is your target a borrower or is your target a realtor? And all you do is copy and paste along with your flyer, and you guys are good to go to post it.
Yeah, I can see Alina getting worked up. We have done this, all this work for you. Our marketing department has, they've created it for whether you're marketing to a realtor or whether you want to market to a borrower. This is all done for you. I promise you, try it.
So many people are not taking advantage of it, and honestly, it blows my mind. One thing that I want to point to is we have a PowerPoint presentation, so you guys have local representation for a reason. Not only can we swing by the office, help you guys with any files that you're working on, but if you're doing any lunch and learn, any presentations with your realtor partners, use us to talk about non-QM. Use us to educate the market on your behalf. We will come in as simply your investor partner, not going to be sharing any of our information. You're still going to be the main point of contact, but we're just going to be simply talking about the non-QM market, how it's beneficial, who these borrowers are, and how to find them and close them for your realtors to grow their business, along obviously with you growing your business as well. We have the flyer, we have the presentation, and we have the long version and the short version, depending on the time frame that you have for your event that you're doing.
Yeah, Alina, this is, and Scott has said it in previous presentations, I believe this is one of the most powerful presentations you can invite your local account executive to. I promise you, if you get 10 realtors in a room with you, the odds are you will get one of their loans. Most likely it will be a bank statement loan because most of them are self-employed. In fact, I shared this on our last call, was 10% of the loans Angel Oak has closed on bank statements have been realtors. So think about that. Invite 10 of them to a presentation, and you will get one of their loans and probably solidify, or if not, create that new referral source. So I'll challenge Alina and Scott that, use them. I promise you, you will not be disappointed. The way they present here, they will present on your behalf as pros. So Scott, anything, I know we're going to turn it over to Mike to close, but anything you want to say in closing?
No, in closing, I had a lot of fun on these 3 webinars. I hope we were able to help give a better understanding of the products and programs and how we work. I hope more than anything else that it added value to everybody's business. It was really fun to be able to go into a deep dive on each one of the products and programs on each call. We will be at the trade show in March, so I look forward to seeing everybody out there. I want to thank Mike again for having us. This was awesome. Hopefully we can do it again, and we look forward to presenting out there at the trade show as well. So see you guys all out there.
Alina, anything?
No, that's it. Looking forward to seeing everyone next month.
Yeah, next month we look forward to it. I'm lucky enough to work with Scott and Alina on a daily basis. They are the best in the business. And the last thing, our homepage here, look at all these programs you can help close borrowers, and it's amazing. We can be your one-stop shop. There is no one else really you should be working with other than Scott and Alina. So I encourage you, use them. They are the resource of resources. And that's all I have to say. Mike, I'll let you close it. And we look forward to seeing you next month.
Hey guys, once again, great call. Thank you so much. Hopefully you guys got a lot out of that. I've got 3 pages of notes, so I walked away with a lot. So really appreciate that. Again, yeah, we'll see you again next month. Attendees, if you got a lot out of this call, I hope you'll consider becoming a member of the FAMP. Yearly membership for an individual is only $99. If you want to do a corporate membership and include 5 people in your company, 5 people for the cost of 4. So for $396, your corporation can become a member. So I hope you'll consider doing that. Again, thank you all for attending. Be looking forward to more events coming up. And thank you, Team Angel Oak, for hosting these 3 presentations for us. And we look forward to getting the presentations for anything we missed. So thank you so much.
You're welcome, Mike. Thank you to the chapter. This is being recorded, just as a reminder. This will be sent out to everyone by end of day tomorrow, along with the debt service coverage ratio webinar and the bank statement program webinar. Thank you, everyone.
Thank you, guys. Have a great day.
Thank you.